Chapter 8. Financial Statements. Which of the following statements is true regarding sole proprietorships, partnerships, and corporations? A corporation is a separate legal entity with its own income tax status. Which of the following would not be included in a statement of profit and loss? Current liabilities. Which one of the following types of organization is a separate taxable entity? A corporation. Retained earnings on a company's financial statements is best defined as which of the following? The accumulated total of the company's profits, less losses, less dividends since incorporation. Which of the following statements regarding common shareholder of a corporation is true? They are liable only for the value of the shares purchased or agreed to be purchased. Which of the following correctly lists assets from most liquid to least liquid? Marketable securities, accounts receivable, inventories, prepaid expenses. Which of the following statements regarding capital cost allowance, CCA, is false? The maximum CCA in a given year is equal to the depreciation expense multiplied by the CCA percentage. Which of the following is not a commonly used financial statement? A corporate statement of holdings. Which of the following statements regarding income statements is false? It is always determined on an annual basis. Which one of the following is not a depreciable asset? Land. Which of the following statements about depreciation expense is true? It is the method used to allocate the cost of an asset over time. Which of the following is a current asset on the financial statement of a business? Marketable securities. Which of the following statements is true? Both sole proprietors and partners must report business income on their personal tax returns. Which one of the following will not be found on the balance sheet of a corporation? Names of the corporation's shareholders. Which of the following statements regarding depreciation expense is true? It is an accounting concept that attempts to allocate the cost of an asset over the life of the asset. Which of the following options is inconsistent with generally accepted accounting principles? Assets are revalued upwards to account for the effect of inflation. Which of the following is a liability on a financial statement? Salaries payable. Which of the following statements regarding generally accepted accounting principles is false? Assets are recorded at fair market value when they are acquired. Which of the following would be classified as a current asset on the financial statements of a business? Rents receivable. Which of the following would generally not be found in the current liabilities section of a balance sheet? Rent receivable. Which of the following is not a characteristic of a corporation? The shares of a corporation must be held by more than one party. The book value of an asset can be best defined as which of the following? The purchase price of that asset less any depreciation taken to date. Which of the following statements regarding trusts and real estate investment trusts, REITs, is false? Income earned by a family trust is taxed at the tax rate of the youngest beneficiary. The practice of recognizing expenses as they are incurred, rather than when they are paid for, is a characteristic of which generally accepted accounting principle? The matching principle. The subject clauses have just been removed from a contract of purchase and sale, but the sale will not complete for another 17 days. Sandy salesperson has already recorded the commission from the sale as income. Which of the generally accepted accounting principles, GAAP, was she following? The revenue recognition principle. Which of the following options is the generally accepted accounting principle that holds that all accounting information should be reported on objectively determined and verifiable data? Objectivity principle. Which following is a liability on a financial statement? Mortgages payable. Which one of the following best describes shareholders' equity? Share capital plus retained earnings. Which one of the following is false with respect to the proprietorship form of business? The proprietor is liable for all debts of their business to the extent of their capital investment in the business only. In the case of a proprietorship, which one of the following accounts represents the link between the income statement and the balance sheet? Net income. Which one of the following transactions does not affect the amount of owner's equity? Purchase of assets by the business. Which of the following statements is true when calculating income taxes payable for a corporation? Depreciation expense cannot be treated as a deductible expense. A statement of profit and loss measures which of the following? Revenues and expenses for a certain period of time. At the end of a profitable year, a business's ownership has decided to leave all these profits in the business. Which one of the following best describes the effect that profitable operations have on the balance sheet of a business? Owner's equity is increased. Which of the following is a liability on a financial statement? Accounts payable. Which one of the following is the generally accepted accounting principle that determines what amount will be recorded on the company's balance sheet as the value of a building at the time of purchase? The cost principle. Which of the following statements regarding limited partnerships is true? There must be one or more general partners. The principle of unlimited liability implies that an owner may lose more money than their initial investment. The final value shown on a proprietor's income statement? Net income.